Okay, so good afternoon and welcome to the last session of the day, of day one at the PBEC Annual Dialogue Summit 2022. So glad you're staying with us, and all live content is being recorded, so you can play it back later if you so wish, if you missed anything earlier in the day. And I'm delighted that we're finishing on a high note here with two wonderful speakers that we've gathered to speak on India. And I have to say, India has come up in our conversations today, earlier in the day, on many fronts, especially in our session on supply chains and global sourcing, where we had a sneak peek of our upcoming report that will be launched later this week in conjunction with KPMG, APAC, and with the Monash University guys. So delighted to sort of look at those figures that were showing India as one of those China plus one destinations. And we're very much looking forward to hearing from our two experts. So without further ado, I'm going to hand over now to the chair, Ritesh Kumar Singh, Chief Economist in Indo-Pacific Consulting in India, but also is a most respected Nikkei Asia columnist on the subject of trade in particular and the geopolitical situation. So over to you, Ritesh. Thank you so much for joining us today. And thank you, Niraj, Sharan, for joining us as well. Have a great conversation.
Mike and Niraj. So let me start with my brief background. I would like to call myself a business economist rather than a trade economist, and I have over 2 decades of experience of advising about Indian economy and its different aspects, mostly focus on regulations. I basically specialize in regulation, kind of macroeconomics and business environment. And my current company, Indo-Pacific Consulting, is basically focused on research and advisory related to risk and opportunity of doing business in India. So with that, I would like to present India as an attractive investment destination as of now. So India, because of the intensifying tension between China and US on the one hand, and US and Russia on the other hand, is at the center of focus at a time when countries and corporations want to reduce their overexposure to China and looking for an alternative investment destination and sourcing destination which can match in scale and pricing vis-a-vis China, which is not an easy job, knowing China. So as of now, India is considered to be relatively a brighter spot because we are still expected to grow at 6.5 to 7% this year, and maybe next year also 6%. And our economy is at the moment 3.49 trillion at nominal GDP rate. And if you look at purchasing power parity, it could be as high as 11.6%. We are still smaller as compared to China, but still we are quite bigger than others, like the second-run countries which are being looked at as for sourcing hub, like Vietnam, Indonesia. And also India has a more diversified industrial base with Vietnam or Indonesia or any comparable country, barring China. So this is a good time to invest in India. There are other advantages of being in India. The first is that if you look at Vietnam or Indonesia, they are mostly export focused, but India's also can be seen as a consuming market. It's a big market of 1.4 billion people, 3.5 trillion GDP, and steadily growing as well. So it's a domestic market, and also the export potential is also there. So if I have to sell India as an investment destination, I would like to recommend it as a local consumption market, also as a export destination for your sourcing your requirements. Over the last 3-4 years, we have slashed corporation tax. So now we are as good as any Asian country in terms of corporation tax. It's now 25-26%. And if you are going to set up a new manufacturing unit it's 17%. So very, very attractive in my opinion. Of course, the major drawback of India is that its per capita income is very, very low. There is no denying to that. But I can say that there are at least 50 million of very, very affluent households with income, per capita income, more than $20,000. So those households can be a big draw for any manufacturers of consumer goods, from cars to homes to bikes. So this is very, very important. Our labor is relatively cheaper because it's a poor country. Add to that lower corporation tax. We are also providing, especially for manufacturing sector, 4 to 12% of the incremental output as PLI subsidy, production linked incentive scheme. And if you are a semiconductor manufacturer, you will also get 50% of your capital subsidy. So I want to summarize that India is a very, very good investment destination if you are a large manufacturing corporations. So you are supported by lower corporation tax, PLI subsidies, large domestic market, potential to export. And there are a few sectors which I want to emphasize, because there are 13 sectors covered in PLI, starting from API, pharmaceutical, food processing, electronics, automotive and white goods, specialty steels. Now textile and toys are also being included. But if I have to offer or recommend a sector, my criteria would be that it should have larger domestic market, a substantial domestic market, and also export potential. On that ground, my recommendation would be food processing, automotive, then electronics hardware, because it's a big market for mobile phones, laptops, computers, telecom gears, pharmaceutical, again, because China is curbing its energy intensive industries, so that there is great opportunity in APIs and key starting material for pharmaceutical, if you are interested. Since we are discussing Asia-Pacific and our target is to attract more and more manufacturers, so I'm emphasizing on manufacturing sector, but it doesn't mean that there are no opportunity in other sectors. Like one sector which is outside manufacturing is infrastructure. We have a huge untapped supply of infrastructure that's going to be a very good investment sector, in my opinion. Then there is real estate, healthcare, hospitality, and tourism. Inbound tourism is booming at the moment. So these are the sectors I want investors to explore, consider when it is deciding about India. And also my key recommendation, I have seen that most of the investors at the moment are focusing on that 50 million of affluent households who can be a source for discretionary, relatively expensive discretionary goods and services. But I think even those segment provide you high margin, high profit by selling premium products. But I think high volume, lower margin, budget goods and services is the sector that should be explored in every segment, like housing, real estate, automobiles, consumer goods. So these are the sectors that I would want investor or future investors to explore, because this market is even bigger, maybe 10 times, 20 times bigger than the 50 million affluent households we are talking about. With that, there's one more thing. One of the major challenge, since we are focusing on what are the opportunity, but I should also talk about one of the challenge is navigating the OPEC and control freak bureaucracy. If you can crack this, if you are able to deal with, or if you are able to navigate the bureaucracy, it's a very, very good market to be in. With that, I would like to pass on the baton to Niraj, who should be sharing his own experience because he is a person who is really into manufacturing. So I think he can give us a better perspective about the ground situation. Yeah, thank you.
Thank you, Ritesh. And good morning, good afternoon, good evening. I know we've got perspective people attending from all over the world. It's good to be here. And Ritesh, you've given a very nice macro picture of what India is and the opportunities here. And since you said, my name is Niraj, Sharan. I'm an entrepreneur for the last 32 years and have lived my life between United States and India. Academically, I'm an engineer with a master's degree, but I've lived my life between US and India. So I bring a little bit of ground zero perspective of what's really going on the ground. So let me give you a quick mix of this. Our economy in India is a mix of services, manufacturing, and agriculture. If you were to give this a pie chart, and services has always led to almost 58, 59%, and manufacturing has been in the mid-20s to high 20s sometimes, and agriculture is around 18, 20%. My personal opinion on this has been that and I've been talking about this for quite some time now, thanks to the demographic that India has, that to make it more sustainable and to make it more stable, we need to shift the pie chart a little bit. And that brings me to the next question is, services will go on. We moved from a call center, back-end office to product innovation. We're doing very well. Manufacturing has lagged, and our demographic is such that we need to have employment both in the manufacturing and the agriculture sector to make it stable and good long term. There is an under-leveraged capacity as well as the so-called China plus one that everyone's talking about. And I think it's not about the 5 years that I think India has or 10 years. I think this couple of decades, if not the whole century, we can actually be very conducive to the world market if we do our things right. So manufacturing, and I know Ritesh, you said something about the large sector and the small sector. There are two different dynamics of how you do business in these two sectors. When you move in, Apple moved their facility here, it's a different challenge. But if you have to do a sub $100 million perspective of manufacturing setup, it's a different set of challenges here. I still believe that there's a lot of opportunities here for India to become a hub and supplier in the manufacturing sector to the world markets, be it in the ag tech sector, in the healthcare, primary, light engineering goods, heavy engineering goods, food processing. I mean, the baseline is so low, Ritesh, has been, that there is so much headroom for us to play. I know we'll get a chance to go into something more later. Some of the challenges. So, we want to be India wants to be a 5 trillion economy. Now, India cannot be a 5 trillion economy until we catalyze the bottom. If we don't go into the underbelly and increase their per capita income by way of doing business, manufacturing, agriculture, food, we cannot get there. So I think the bottoms up last mile intervention, as I call, is a very, very key aspect of how to catalyze and invest here and come here and do it. One challenge I see, and I'll come back to that after in the second round, is while everyone talks about the inadequate hard infrastructure, I would definitely like to say a little bit that we need to skill ourselves much better here in terms of not just the technology skill sets, but the other cognitive abilities of discipline, resonance, and compliance. We're getting better, a long way to go, but I feel very good that in the coming many, many decades, the pivot point that has started will happen, and a lot of manufacturing, services, and ag, all three will surge forward. Back to Ritesh, we can get back to some of the points later.
So I think my opinion is that we need to tap between the linkage between all these three sectors like agriculture, industry, and services. So if agro processing happens, it will lift agriculture as well as manufacturing. Similarly, if these two sectors are growing, services will also grow. There are lots of scope for intermediate services. Like, see, for the major problem with services export, in my opinion, is that regulation in importing countries. So I just cannot be a lawyer and start practicing in US unless I get the regulatory approval or pass the local bar exam or whatever eligibility criteria. But I can always assist being in Delhi or in Dehradun to a law firm by doing legal research. There are no restrictions. And it helps a law firm based in Washington in cutting its cost. So these kinds of opportunities are also there. Knowledge processing, I can say that. And there are no restrictions. And our core area is educated workforce, a technically educated force. So we also need to tap that. I also run a small business, of course, is services. So it's relatively easier, I can say that, because I don't have to deal with environmental related issues, transportation, GST, all these things. GST, of course, yes, but not other things. So my problem is that I'm 100% export as of now. So 2-3% of my revenue goes into exchange of currency from dollar to or euro to rupee, which is very, very high, because there are many manufacturing exporters like ready-made garments who operate on 5% margin, 3% margin. Suppose you take 2-3% as currency conversion charges, they will be losing business. And that's the reason why this is one of the major reasons. It's not that this is the whole and sole reason, because we are also facing increasing labor cost disadvantage. So Bangladesh is better in terms of labor cost. So is Ethiopia. And because of that, this low margin export, where we can deploy or employ semi-skilled, unskilled people, are gradually switching to poorer countries like Ethiopia, Bangladesh, Cambodia, Myanmar. So we need to move up the value chain, is the advice given by the government, but it's not that easy because there are so many challenges. And one of the challenges you talked about indirectly is soft infrastructure, which is a serious problem in my opinion. And one of the soft infrastructure challenges is to deal with regulation. Yeah, it's very, very complex. The cost of compliance in terms, not only in terms of money, but also in terms of time, is very, very high for smaller businesses. That's why I say that India is a very good country as of now as an investment destination for larger corporations, which are sufficient enough to deal with this regulatory compliance burden, which is increasing every day. So like 3-4 days of every month I spend in dealing with compliance, filing, reportings, audit, whatever. And a small country cannot have expert for every segment. Like I can't have a chartered accountant, a company secretary, an accountant, because that will increase my capital overheads and turn me into a profit-making company to a loss-making company. If I hire experts for all this. Of course, there are part-time experts, but that add to the cost and lowers the margin. So it works in services, but it makes it very difficult to survive in low-end manufacturing, which tend to have very, very thinner margins, like ready-made garment exports, as I give you an example, because I have a background from Raymond, so I understand this. Even Raymond ready-made garment export operates on 10% of the retail price. So the margin, so what I mean is that Raymond gets only 10% of the retail price of the apparel it exports. So say a company called Kanaka in Japan, it could be even lower in US. So if the margins are lower, and for bigger companies, dealing with banks is very, very easy, or relatively easy, I can say that, in terms of cost, in terms of time. For smaller scale businesses, it's both ways. The cost of borrowing money will be higher. The cost of conversion of your export income, forex income, will be higher. So they are always disadvantaged. So government needs to do something about smaller scale industries. And I do agree that we cannot become a 5 trillion or 10 trillion economy unless we take care of the bottom of the pyramid or the middle segment or the lower segment of the economy. And it's better if there is increasing linkage between large corporation and smaller businesses, but it's not possible for all segment. It's possible for, say, automotive, pharmaceutical, but it may not be possible for a company like me. So
Ritesh, so you made a valid point. I want to differentiate that India's value proposition is unique in its own way. We have a fairly large amount of young people who are reasonably well skilled, and English being what we have as a language of work for the last 60 years. I believe that in the manufacturing sector, we are best in the mid-range where more value added, so there is an amount of design, there is an amount of customization that we can do. We are not typically a country that can do hundreds and hundreds of containers of one product going out. We are not competitive in the world market for that. But if you're talking about a container, or 2 containers, or 3 containers that runs through batches with design, with engineering, with manufacturing, with precision, I think we do very well. So this is where I differentiate that in the manufacturing sector, there is this one big Goliath thing that Apple can come here and set up whatever, and the cars can come here. But there's an unmet export opportunity that is down the line of various assemblies and products that is designed and made and exported for the same company or other companies in the world. And we have found in our experience in our businesses that clients in $100 million revenue, that they have $100 million revenue outside, are looking for value prop manufacturing design support after sales people, both in the services as well in the manufacturing sector. So I would recommend that pick up your mid-scale, high value-added, customized value-added design products, whether it is in the ag tech sector, healthcare, or it is in the engineering or electronics, as you said. And we should be doing okay in that, because there, the dollar-rupee exchange also is currently in our favor at this point. And I don't see that change. I don't see the dollar going weaker and the rupee getting stronger in the very near term in 2 to 3 years' time. So we should be okay on that. That is what I think is in the manufacturing sector, in the agriculture sector. Unfortunately, we spent too much time in the low yield crops like the rice and the paddy and all that. The time has come now for the next generation revolution that we can do a high yield crop, green version 2.0. And, these are the things that we should focus on, and we will actually be doing very well. I mean, look at Thailand, such a small country. It's done super well in food processing in the world. I don't see that much Indian product except for a few cans of something which is very traditional Indian. We can do that. So there's a very, very big untapped market. It's in the mindset. I think we need to change a mindset to pivot to new frontiers within the larger. And this is the opportune time, I believe, that we can grow not 5x, 10x if we do it right. That's what my parting 2 lines on this is. Very bullish. I think pick your play well. It's not that, and there are centers of excellence in India. There are hundreds of cities, but there are 6 to 10 to 12, Delhi, Bangalore. Bangalore is known for its software. Delhi is known for software, manufacturing, media, like Chennai, Hyderabad, Pune, Bangalore. I mean, you pick, you choose your pockets of excellence. There's a particular industry. It's like a hub. You create that value added and you go forward. Very bullish. I think unless we do something wrong, I think we're doing well at this point.
So I missed one point that I want to emphasize, and I'll come back to you again because you have given me a small topic that I want you to speak more. So one of the ways, new ways to attract, to improve the relative attractiveness of India as an investment destination is that we are also trying to get into FTAs. Those talks are slow, but things are moving fast. Like if we sign an FTA with, say, European Union, GCC grouping, we have just signed UAE and Australia. So Eurasian region, Latin America. So this could also help us in becoming a major sourcing and manufacturing hub. One thing I am curious now, because I do tend to agree with you that we should be tapping or exploiting our niche potential. That's what I think you said. So using our brain power and trying to find gaps in the global market and try to fill up, rather than trying to do a China, large volume, very, very low cost. I slightly differ on this. We also want some of that, like electronics, for example, but we should continue to tap our niche areas. But I would like to know, to be honest, what suggestion you can give us to be very, very successful in food processing, something you have learned or have seen in Thailand that we are missing? If you can quickly say, because we are almost 4-5 minutes.
I know, we've got only 3 minutes to go. Just as an example, I mean, tell you, we grow tomatoes here. We grow it like them in millions and millions of things. It sells at like $0.50 to $1 a kilo. But you go and buy cherry tomatoes of 10 different variety and you pay 5 times the price. Therein lies the value. Therein lies the value. Why can we not grow asparagus, different type of fungi and mushrooms? Why cannot we grow garnishes? Because as the per capita income of India goes, the taste of people also goes up the value chain.
Yes, in fact, we're importing high quality food from outside. So yes, there is some market that is expanding. Yeah. Yeah. So we have a local market.
That was just a teaser example of how to pivot from a regular tomato to a cherry tomato. Is symbolic, it's metaphorical. There are many, many products of that. Similarly, in electronics, in engineering and precision, in apparel, in formulations, APIs, everywhere. I think the strategy lies in picking that sweet spot where value added, sustainable, not linked with any trade barriers or support, free market. I think that's the long-term strategy I would advocate to everyone, because then even if the policy changes, we're still good to go on that.
Yes, and I think rupee exchange rate should be supporting us for at least shorter to medium term. As of now, I hope that rupee remains weak, because it will promote export, it will create labor-intensive jobs and all kinds of jobs, services, manufacturing, because it promotes all kinds of export, not only manufacturing exports. So it was nice talking to you. I guess it's time.
My pleasure, Ritesh.
Yeah. We'll keep in touch. We have our numbers. Yeah.
Yes, we will be in touch. If you allow me to say one last line is to everyone who's here listening, that India is a country that has a lot of good IP protection, intellectual property. There is a legal system that works well. Yes. There may be delays, but it works well. So I don't think there should be unwarranted fear in these regards. So I think it's a great that way environment to set up joint ventures, wholly owned subsidiaries, or just a buying or play the local market. You're going to do well. So that's my parting thing is it's safe.
Yes, and this is a very good point. It needs to be emphasized. Of course, nice talking to you.
So my pleasure, Ritesh, and thank you, everyone. And then let's stay in touch.
Yeah. Thank you, guys. Thank you, guys, for a great conversation on India. And I learned a lot, I have to say, and pleasure to hear from valued experts. So that concludes day one of our PBEC Annual Dialogue Summit. Join us tomorrow morning, bright and early, 8 o'clock Hong Kong time, for a breakfast dialogue with 3 of the directors. That will be focused on Hong Kong in particular, just as we're trying to take opportunities at this time to make sure that Hong Kong is putting its best foot forward again. And I think that is welcomed in the region and in the world, to be honest, that Hong Kong is back in from a business perspective and looking to engage as much as we can. So look forward to that in the morning. And then we have a full day of sessions going around the region again, going over to Latin America, to the Pacific. We're going to hear from the French Polynesia, Hawaii, Chile, Peru, Mexico. So I'm looking forward to that. So if you can join us bright and early or not, then we're on all through the day. So even when you wake up tomorrow, if you're in Europe, we'll still be on with a Canada session to round out day 2. So thanks again for everybody who joined us today, and look forward to seeing you once again in the morning. Have a good evening.
Thank you.
Have a good day wherever you are. Bye-bye.
Bye. Thank you.